Hi everyone, in this video we'll be beginning with the chapter number 12, Single Candle Lines of CMT Level 2. Before watching this video, make sure that you check the entire Level 2 playlist in case you haven't, and I've linked it in the description box below. So this chapter is going to be quite simple because you have already done this, a little bit of this in your level 1, because of which this can be a little bit easy. We'll be referring to the examples and we'll be learning all the patterns which are visual in nature, which we can use in our trading decisions. So we are going to see the various sorts of candle shapes. And when I say candle shapes, what exactly are candle shapes? Candle shapes basically depict the market behavior, or it depicts the psychology of the people who are present in the market. Diagram and interpret notable individual candles, hammer, hanging man, doji, and others. Demonstrate the importance of such candles in context of trends. Differentiate between buying and selling activity represented by real bodies and shadows. So let's talk about what are spinning tops and high wave candles. Okay, so right now we are not talking about a group of candlesticks. We are talking about one single candlestick, and we're going to study patterns which only consist of one single candle. Now, one thing you need to keep in mind that candlestick patterns are more powerful when they're used on a higher time frame. I'm not saying that candlestick patterns on 15 minute, 1 minute, 1 hour don't work. They do work, but if a pattern is formed on a bigger time frame, that is more um, trustworthy as compared to the ones which are formed on a lower time frame. So the win rate is going to be higher as the time frame increases. Okay. Many candle signals consist of two or three candle patterns, but we can obtain volumes of valuable information from single candle lines. Don't let the simplicity of single candle lines to fool you. They send compelling signals as to who is winning the battle between the bulls and bears. In this section, you will learn interpreting market psychology as indicated by small real bodies and long shadows, identifying and distinguishing between spinning tops and a high wave candle, how to use spinning tops and high wave candles in a box range, how to identify the hammer and the hanging man, and the importance of candle signals in the context of trends. So these are the key terms. You can pause and note them down. Okay. So the first and main thing is that if you want to spot any sort of breakouts, or if you want to spot any sort of reversal, then candlestick charts give you an early sign of reversals, right? So they indicate an early trend reversal. But they also have the advantage of displaying the force underpinning the move. Since nearly every candle line has a story to tell about the market's mood and manner, we'll start with how to use real bodies to gauge the force. You may remember from a previous discussion that the Japanese call the candle's real body the essence of the price movement. Indeed, the length of the real bodies in relation to their shadows furnishes you with unique insights into psychology. Obviously, a tall white real, okay, when they say white body, that means it's called, they're talking about a green body. When they're talking about a black body, then they are talking about a red body. Obviously, a tall white real body reflects a session when the bulls are dominant, whereas a black real body shows that the bears have greater control. However, when the real body shrinks, the real body can be black or white. It is a strong hint that the prior trend may be losing steam. So, very simple. Try to understand the different patterns. For example, just try to understand the psychology. If there's a candle like this with no wick, okay, and it is in, let's say, green color, what does this candle show us? This candle shows that the price opened over here and the price closed over here. This is a strong bullish candle, right? The bulls are really strong here, that's what we know. Now let's take another candle. Okay, look at this. What does this particular candle tell you? The price opened over here and it went all the way down and closed over here. This shows that the bears are strong, right? Now we'll study about the wicks. Let's take a candle which looks something like, let's say, this. It is still in green color. Keep that in mind. Since the candle is in green color, you might assume that it is bullish. But is it really bullish? Think about it from a perspective. Think about the psychological perspective. Market opened over here. The bulls were so strong they tried to take the price till here, but eventually they came down and they closed over here. Even though they closed in green, imagine the bulls went up till here, they weren't able to sustain, and then they got closed down. This shows that bears are in control now. So that's the way you read the candle. Don't just try to by heart it, try to understand the logic behind it. Let's take a red candle like this. Here also you might assume that, oh, it's a bearish candle. But is it really a bearish candle? Think about it. The market opened over here. Bears tried to take it so down. They tried to take it till here, but they weren't able to close the price there. Bulls came into control and came up and closed over here. So even if the color is red, bulls are in control. So that's the way you're supposed to read these candlesticks. Okay. Yeah. A spinning top, figure 12.1. This is spinning top. Is a picturesque Japanese term for a candle with small real body, either black or white. So the way we saw, the body is so small, the body isn't big at all, right? So this is what is known as a spinning top. Spinning tops may have upper and lower shadows or none at all. The important identifying trait of these candles is their diminutive real body. Later, you'll understand how spinning tops are components of candle formation such as morning and evening stars, harami, hammers, and shooting stars. Okay. What is the key point? For the small real body, the color is not important. The diminutive size of real body sends out the warning signal, not the color. So if there is a very small body, then it's known as a spinning top, like these. We will also see the difference between high wave candles when we discuss it. A small real body shows that the bulls and bears are battling it in a tug of war, with neither the bulls or bears being able to take the dominant control. So, in the examples which we saw, we had one side wick, right, that showed us who is in control. But if I have a candle like this, and if there's a wick like this, okay, and this is, let's say, red, who's in control here? We can't say anything, right? Because even the bears showed power, even the bulls showed power, and even the bears showed power. So we can't say who's dominant here. So that's the way you need to read it. Selling pressure pushes the real body down, but buying pressure keep it from being a long black real body. In other scenario, for a spinning top, demand is stepping in, but supply is counter-attacking, and in doing so keeps forming a tall white candle. Spinning tops have a sort of cousin named high wave candles. High wave candles also have diminutive real bodies, either white or black. To qualify as a high wave, however, these candles must not only have small real bodies but also long upper and lower shadows. So they need to have a really big candles, really big wicks, sorry, not candles. They need to have a small body. See, high wave candles as well as the spinning tops, both of them need to have really small bodies, but the difference between spinning tops and high wave candle is that high wave candle needs to have really big wicks. That's the difference between both of them. The similarity is that both of them have a really, really tiny body. Okay. Spinning tops have a sort of cousin named high wave candles. High wave candles also have diminutive real bodies, either white or black. To qualify as a high wave, however, these candle lines must not only have small real bodies but also long upper and lower shadows. The shadows of the high wave candles need not be the same size, but both the shadows have to be unusually long. If spinning tops translate into indecision on the part of the bulls and bears, high wave candles indicate downright confusion. As you can see, studying figure 12.1b, where's 12.1b? Yeah, you can look at it, right? So in the high wave candles diagram, you can see that both the wicks, there's a wick on the upside as well as the downside, and both of them are exceptionally long, so we can't really say anything about the direction. Okay, so if spinning tops translate into indecision on the part of the bulls and bears, high wave candles indicate downright confusion. As you can see, studying figure, we can see that long upper shadows means that sometime after the sessions open, buying pressure sure thrust the securities price to an extended high. But in the same session, we also saw that a selling pressure also happened. So
spinning tops basically say, do not give any signal. It says that the market is right now indecision. There is no sight. But you can see that in the high wave candles, the market is having a bullish move as well as a bearish move. Both of them are strong. So now take spinning tops and high wave candles into the context of an uptrend or a downtrend on a chart. In a solid uptrend, the market might rise, but the shape of the candle lines during the ascent is an important clue about the sustainability of the advance. So if you can see that big body candles or long white candles or big green candles are there, then that shows that the rally is strong. But if there are small real bodies, either black or white, during the uptrend, and you can see that the particular trend is basically weak now. This is because the small real bodies imply that bulls have less than full control in spite of the advancing prices. Such spinning tops are a warning not to follow this market from for long side. Spinning tops become even more consequential in a market that is becoming overextensive, perhaps nearing resistance. A trend shift in the reversal may be in the offing. Um, Wait, I don't think this is visible. Okay. A high wave candle has the name because the Japanese compare the very extended upper and lower shadow into large ocean waves. Okay. So it's basically derived from oceans. Conversely, if you see spinning tops moving sideways in a consolidation or a box ring, they are not signaling a trend reversal or a shift. The market is simply resting until it breaks up. So that's the part, that's the way you use these candles, right? You can't just look at them and try to make a guess. You need to also combine it with what kind of trend is happening in the market. And you need to combine it with the trend. Okay. Three candle lines are contain spinning tops are hammer, hanging man, and shooting star. So hammer, hanging man, and shooting star. Now, what is the difference between a hanging man and a shooting star? If there is an uptrend and there you get this pattern, then that means that this is a, one second, let me again draw. Hammer looks like this, right? Shooting star looks like this. First, you need to learn these two patterns, hammer and shooting star. Now, let's look at them. So, let's focus on hammer and the hanging man. So, hanging man also looks just the same. The only difference, this is hanging man. The only difference is that hammer is formed during a downtrend, which means towards the end of a downtrend. Whenever you have a hammer, if a hammer is present in the downtrend, it's called a hammer. But if a hammer is present in an uptrend, then that means that it is a hanging man. So if we have, let's say, two things, like we have an uptrend going on, and here you have this pattern, then that is known as a hanging man. But if there is a downtrend going on and here you have this, that means it is a hammer. So that's the difference between the two. Nothing to discuss. Look at this hammer towards the end of the downtrend, hanging man towards the end of an uptrend, shooting star also towards the end of the uptrend. Now, color really doesn't matter since the body is really negligible and the body is not very big, so the color doesn't matter. Whatever the color is, it's the same. The hammer and hanging man candle lines have small real bodies, either black or white, and these real bodies have to be at or near the highs of the session. Another criterion is that they need very long lower shadows, at least 2 to 3 times the height of the real body. So the shadow or the wick has to be 2 to 3 times the body. If I have something like, let's say, this, that doesn't mean it is a hammer. The wick needs to be at least double or triple that of the body. A hammer will appear at or near the bottom of a decline, either brief or extended, thus the name hammer, which suggests that the market is hammering out the base. The hanging man has the shape of the hammer, but it comes after an uptrend, preferably at a new high for the move. Because of the hanging man's bullish long lower shadow, one must wait for a close under the hanging man before becoming bearish. You need a continuation candle before you actually take a trade. With the hanging man's bullish lower shadow, one might think that this line can be bullish. Although the bullish shadow is a positive, the hanging man's small real body shows that there is some hesitation. And the long lower shadow, while it is a plus, shows that at some point during the session the market has sold off. That all of these are basically signs that the trend is now about to reverse. The shooting star is a top reversal line, just like hanging man. A shooting star, however, displays a long upper shadow and its small real body near the lows of the session. This is what a shooting star looks like. Okay, long tail soaring across the sky. The Japanese say that the shooting star shows trouble overhead because of the shooting star's bearish long upper shadow. We don't need much as bearish confirmation. With that, we needed of a hanging man, because here both of them are confirmed, right? Since it has a long wick, it is obviously confirmed that there is a lot of selling pressure in the market. A shooting star is a bearish reversal sign, so it must appear during a rally. Shooting star real bodies can either be black or white. All of these patterns can have either of the colors. A shooting star tells you that the market is rising in an uptrend and is perhaps becoming overbought. Finally, the bulls refuse to pay anymore. The shooting star forms as the session opens near or at what will turn to be low. It rises, but the bulls cannot sustain the demand. Bears come in and drive the price back down. A long upper shadow on any candle means selling pressure. We discussed that, right? Okay, this is sidelight. Okay, give me a moment. I'm just getting the book since we can't see this. We are okay. The Japanese The Japanese have an all-encompassing description of candle lines that form with long lower shadows and small real bodies near the top of their range. Umbrella lines is one of the Japanese book. There was a line that looked like a hammer. The text related to this figure: buy from below and sell from above. As with the most candlestick wisdom in the original, this text required some mental gymnastics. Okay. Yeah, they were just telling us about the book Umbrella Lines. If you're interested, then you should read that. As you learn to review the different candle formations, you can see how each candle line tells a story. With small real bodies indicating indecision, long real bodies showing definite opinion. So you need to learn and you need to try to read the candlesticks. In section 2, we'll talk about a candle similar to a shooting star called a gravestone doji. Okay, we'll also see what is gravestone doji. The reason why I'm not going into the detail of these concepts is because you've already done that in CMT level 1, so I'm assuming you know this. Okay, now let's talk about dangerous doji. In this section, we'll focus on the powerful single candle line known as doji. Doji means indecision, okay? The doji plays an important role in candle charting techniques. When it appears in the context of an uptrend, especially in a zone of prior resistance, it can signal that a sort of, significant trend shift or like a reversal might happen. Naturally, candles subsequent to the doji's appearance confirm the potential turn. In fact, the doji's ability to convey the market's message is echoed in letter 1 received by from a medical doctor. As a physician, I can most appreciate the simplicity and effectiveness of candlestick charting. Like a stethoscope, simplistic in design but powerful in diagnosis, candlestick charting has shown me a sort of form of technical analysis which is good to diagnose the health of my stocks. Okay. The Japanese place great significance on the power of doji, especially in the context of a market experiencing a mature uptrend. This candle line, either alone or included in 2 or 3 candle patterns, warns you that a trend shift may be offing. The doji is a session in which the opening and the closing prices are the same. Therefore, it resembles a cross. So whenever you think of doji, just remember a cross or just remember this. This is how a doji candle basically looks like, right? Because the opening and the closing is in the same way and in the same area, and there is a wick on both sides. So the price went high, the price went low, but it opened and closed in the same particular area. Like the spinning top, the doji indicates market in complete balance between supply and demand. Since a doji session represents a market at a juncture of indecision, it can often be an early warning that a preceding rally could be losing steam. The ideal doji forms within the same opening and closing price, but this rule is flexible. So, because sometimes if you have like a point of difference, a little bit of difference between the opening and closing, then also it is known as doji only. So, it's not necessary that it should be exactly at that particular opening. So, you need to be a little bit flexible with it because market is different every single day. When the opening and the closing prices are only a few ticks from each other, you may still consider it to be a doji. Maybe you've heard the old saying, the stock market hates uncertainty. The doji is synonymous with uncertainty. Consider the doji a warning that the framework built by the bulls may soon falter or crumble. While doji are extremely valuable at calling market tops, especially after a long white candle, they sometimes lose signal potential when defining market bottoms. The doji's possible negative influence at trend tops comes from its warning that the market is indecisive. Let's say that until now the market was sure that it was going up, there was a sure shot uptrend. Suddenly, after reaching the top, the market is indecisive and it's creating doji over here. That shows that suddenly the market is not sure if it really wants to go up. So either it can be a consolidation and it can go up again, or either the market has lost its steam and it might start going down. So either of the two can be the just a second. Either of the two can be the reason. Moving on. Okay. Yeah. Although a doji's appearance in a rally might signal an exhausted market, a doji's emergence in a downtrend may not portend a bottom. Okay, so keep that in mind. Doji in an uptrend can mean that it will go down, but doji in a downtrend doesn't mean that the market is going to go up. Okay, when a doji is formed in an uptrend, for a reversal, it is a better option as compared to a doji which is formed in a downtrend. Why? Because remember that doji indicates indecision. Indecision and uncertainty in an oversold market may just be a resting place. So if the doji is formed in an oversold market, it can just be a resting place. But if a doji is formed in an overbought market, then it might become a reversal. Depending on the placement of the open and closing price on the session, some doji have nicknames. These dojis are still reversal indicators. So these are just different types of dojis which we will see. The pronunciation of doji is doji, and the plural of doji is doji. Okay, yeah. So this is how the various types of doji look like. Long-legged doji. Long-legged doji basically has two very long legs. Dragonfly means is similar to a um, hammer, right? Because it has a very long wick. Gravestone doji is similar to a shooting star, and gravestone, basically, I know the name is depicting a person in a grave, but it's rather just remember it by shooting star. So long leg doji have two long wicks. Gravestone doji has one upper long wick, and dragonfly doji looks like a dragonfly or looks like a T. So, what is a northern doji and a southern doji? Northern doji is when the doji appears in an uptrend, and southern doji is when the doji appears in the downtrend. The dragonfly doji comes with an open and close near or at the high of the candle. This candle emits bullish implications. Obviously, just look at the dragonfly doji. It shows that a lot of buying pressure is there in the market, right? It obviously shows us the bullish strength in the market. Its long lower shadow shows that the market fell sharply during the session, but the buying pressure was so strong that it pushed the price back up to the close, which is very near to the high as well. If you're thinking this doji resembles a hammer but without the real body, you are correct. So that's what I just told you, that dragonfly is very similar to hammer, but the only difference between the hammer and a dragonfly is that it doesn't have a real body. Pay attention when you see the dragonfly doji emerging during declines that have become oversold. Normally, doji in declines are not important, right? The normal doji in decision candles are not important. But if it's a dragonfly doji, then it is an exception. The bearish counterpart to dragonfly doji is the gravestone doji, which is also shown in the figure which we saw. It is like this. The gravestone dojis open, low, close, all reside at the bottom of the candle. From the shape of the doji, you can understand its name. It looks like a tombstone. Okay, so let's read the key point. The doji is more influential when it is a rare occurrence. If numerous doji have formed in a particular chart, then do not view the development of a new doji as meaningful. Let's also read the sidelight. I know you can't see it, but just understand and listen to what I'm saying. A Japanese proverb says, "Don't climb a tree to catch a fish." The gravestone doji has an ominous sound to its name and portends a potential uptrend reversal. But don't give it more importance than it really has. Okay, moving on, the gravestone doji. Just a second. Okay, moving on to the gravestone doji strong point. The gravestone doji's strong point is in calling top reversals. Imagine an uptrend becoming overbought, rising on white trail bodies. Perhaps a glance at the chart tells you the recent resistance is at the same place. So that's how you're supposed to combine these. If these particular candlestick patterns are formed at particular areas of interest or a particular important zones, then that's when it becomes more powerful. So you need to keep that in mind. So the area where these patterns are actually formed, that's more important than anything at all. So keep that in mind and always take that into account and take that into consideration. If the okay, to differentiate between doji appearing in a rally and those materializing in decline, I refer to former northern doji and the latter as southern doji. So northern doji is something which is formed in the north or something which is formed above, and southern doji is something which is formed below or something in the south or in a downtrend. So that's the difference between the northern and the southern doji. Don't get confused if there's a question in the exam asking what is a northern doji or what is a southern doji. It's just this. A doji with long upper and lower shadows is called a long-legged doji. The doji gives optimum signals when taken place in context of a prior trend. Yeah, so you need to use other indicators and you need to see the zone where it's formed and you need to consider all of that before taking a decision. Let's see the key point. When the market is rising and overbought, and then a doji appears after a tall white candle, the Japanese say that the market is tired. What an appropriate way to view doji. A doji's emergence may not foretell an immediate price reversal. It may only suggest that the market is vulnerable and susceptible to change. A trader can use the highest high between the doji and the prior candle as resistance. If the market closes above that area, then Japanese basically say that the bulls are refreshed. Again, a trader can use the highest high between the doji and the prior candle as resistance. So if I have a prior candle and a doji like this, then which is the highest high? This is the highest high, so that can be acted as a resistance. In case this is how the candle is, but my doji is this big, then this will be my highest high. In case the price closes above this high or this high, then we can say that it is invalidated and bulls are strong again. Okay, now let's come to section 3. In previous sections, we focused on single candle lines that incorporate small real bodies. These small real bodies project indecision on the part of market participants, especially when they form at support and resistance areas. Now we'll switch gears and talk about long real bodies. Candle lines with extended real bodies can also display strong signals, especially when they touch support and resistance levels. Towards the end of this section, we'll summarize market psychology as it pertains to single candle lines and their shadows as well as their real bodies. Okay. A candle chart displaying small real bodies at the culmination of an uptrend or downtrend, or even intermediate moves in the to the upside or downside, indicates that bulls and bears are basically fighting in a dead high heat. The flip side of these small bodied candles, which include spinning tops, high wave candles, doji, are single lines incorporating long black or white real bodies. The Japanese refer to this candle line featuring this extended real body as belt hold. Now let's see what a belt hold really is. Look at this particular um, diagram which is given over here. There's a downtrend and here there's a big green candle, belt hold lines. There is an uptrend and there is a big red candle, bearish belt hold. So this is what is a belt hold, which is you have a big opposite color candle at the end of the trend. Okay. The bullish belt hold is a tall white candle. Bullish should obviously be white or green, right? White candle that opens on very near the low of the session and closes or near the high of the session. When it appears in a decline, it forecasts a potential rally. When it appears during an ascent, it keeps the bull trend intact. So you know what is a bullish belt and a bearish belt? I don't think there's any confusion. The sidelight says that the Japanese name for the belt hold is derived from the sumo wrestling term yorikiri. Yorikiri means pushing your opponent out of the ring while holding onto his belt. So the reason why I'm reading the sidelights is that you remember the meaning of these particular, if you remember these kind of stories, then it's easier to remember the pattern. Okay, I'm not reading this. If you want, you can read this. Okay. As you can see, the bearish belt hold is a long black candle that opens at or near the high of the session and then tumbles lower in the session, unfolds. If the candle line appears in the context of a mature uptrend, then it may form a top reversal. Generally speaking, the longer the height of the belt hold candle, the more important is the signal it gives. Obviously, if it's a bigger body, then it is more legitimate to be followed. That makes sense because an extended range culminating in a session's closing means that either bulls or bears dominate the session. In order to identify which of them are dominating, you need it to be give us a very clear and a very big sign, right? So you need a big body in order to give you a more strong signal. As you can see by the support and resistance lines in figure, belt hold lines appear prior or at prior support or resistances, thereby confirming the strength of those areas. So you need to make sure that they are appearing at some strong level. Okay. Like many candle trend reversal signals, bullish and bearish belt holds can play an important role in sound money management principles. Say you are long and your stock rises nearly in an uptrend. Soon a doji or spinning top appears, then a bearish belt hold forms. The doji was a warning to scale back on the longs, but the bearish belt hold completely confirms that the reversal is starting. So that means that you can book your entire position. So you can also use these candlestick patterns to book your targets. The reverse scenario occurs if you are holding a short position. Obviously, if there's a downtrend going on and then you see that dojis are forming and then there is a bullish belt also which has been formed, then you know that now you are supposed to exit the particular trade. We've explored the size of the real bodies thoroughly in the previous pages. Still, candles' upper and lower shadows or lack of them also tells a story. In the last section, we looked at the long lower shadows of hammers and long upper shadows created by the shooting star. The long lower shadow of the hammer echoed the fact that sometime during the session the market did sell off sharply, but the session's end the market had regained all the lost ground and closed near the high. So likewise, if there is a tall white candle that also has an extended upper shadow, offsets some of the bullish implications of the tall white candle. Conversely, if the bearish implications of a long black candle are mitigated by long lower shadow. If there is a big red candle, okay, but at the same time there is also a big wick, then this will make it less bearish because there is a big wick as well. Okay, imagine you see a market stabilizing at prior lows or support zone, then stabilize. At that time, many of the shadows develop with definitely long lower bullish shadows despite the size of the real body. That tells you that the buyers are accumulating each time the price comes down to that support level. As a trader or investor, you might monitor that stock for possible basing. So that's what I was saying. At a support area, if a lot of indecision candles are being made at the same area, that means that accumulation is taking place. Okay. So that's it for this chapter. In the next video, I'll be starting with the multi candle stick patterns.